your Social Security benefit may be subject to taxation. Is that true or false?
True.
True.
But, but, as Janet likes to say, yes. But not all of it.
Right.
Much to the chagrin of everybody that is going to draw Social Security. What do you mean it's taxable?
Yeah.
That's the general response that I get when I start explaining to people. And we deal here mostly in gross dollars in retirement and then calculate what the net would be, or we work backwards or whatever the case may be with the client. But when you tell someone that their Social Security is taxable, the most common response is probably not for the radio.
Not public consumption worthy.
Yeah, absolutely. And then what do you mean it's taxable? I already paid taxes on that money. Well, actually you didn't, because when you made your paycheck, they took the Social Security out before they applied the tax.
Even though Social Security is a tax.
Yes.
But I got you. I'm with you. Look, it's
Hey, don't try to understand tax law. That's the first. That's probably the first rule for today.
Yeah. Okay, so there's a couple that may have been new to you as far as what we just talked about in the true-false statements. Listen, all sorts of variables matter in retirement. Your filing status, the sources of your retirement income, as we've just illustrated there, talking about Social Security, and the total amount of income you receive each year. And everybody's situation is different. So we do want to offer the disclaimer right off the top here too. Everyone's tax situation is different, so you should always consult a qualified professional tax advisor to discuss your specific tax situation. We are financial advisors and do not provide tax advice, but we do help people understand how the tax code and other rules could impact their financial planning and investments. And we do develop a plan to take into account many of those things that people encounter and need to consider, especially around taxes and retirement.
Scott, as you were talking about, we don't provide the actual tax advice, but we do provide tax planning, forward-looking tax planning. But we do that all the time in concert with someone's tax advisor, because you've got to work together with that tax advisor, because the tax advisor has this unique position of being able to see all of your income, every situation that could potentially affect your retirement income planning and your tax situation. The CPA or the tax advisor has that view, but oftentimes they don't have the view of ways that you might be able to think about that could dramatically impact, from a good situation, your tax situation.
Yes, often your CPA is stuck in kind of a reactive position.
Yes.
You give them the information, they tell you the impact. What we can do is on the front end say, if we do this, here's what it could possibly create for you income-wise, knowing what that's going to do to their taxes.
I have a client that I'm working with right now. They've had a small business for a number of years, sole employee in that small business, and they never started an SEP program. Now, they've had an accountant all these years. The accountant never said to them, hey, how about starting an SEP program? So what do? We say, talk to your accountant about starting an SEP program. The accountant goes, that's a great idea.
Yeah.
I mean, that was the long and short of it, but that's how that situation rolls. And we've just come at it from two different perspectives. As Teresa talked about, the accountant is very reactive. They look at what you did last year and they say, okay, here's your tax impact. Oftentimes what we do is we look at it and go, okay, how can we get that tax impact less? Because that means you have more money to save and more money to take advantage of in retirement.